This is Andy with Quality Stocks. Today is Tuesday, June 29th, 2010, and we were asked to take a look at GOIG Global. I believe that's pronounced GOIG. It's a pink sheet stock trading on the ticker GOIG. Just a great move yesterday, up 55%, combined with a nice move from the day before. GOIG has yielded some great gains for those that got in at the support level at 006 over the last couple days. A very strong move this year from down around trip 05 up to over 6 cents. Incredible gains. See, it's done a pretty decent pullback since then. So you expect the indicators to have a pretty good downtrend, but you want to look and see if they give you any indication that there was a possible reversal coming. And that answer is yes. You can see the histogram trending towards zero. Popped through it yesterday. The PPO histogram also trending. It's getting a bullish cross right now. It looks like it's getting ready to turn. ADX had set itself up nice, kind of in classic ADX fashion, with the positive DI down low and negative DI up high. We're getting ready to see some bullish crosses right there with the ADX. Nice positioning for a stronger move. MFIs, of course, the MFI got the 7 dropped pretty low, based pretty much on this selling day. A lot of selling, but it actually pulled itself right back up. Good sign that the way that it held. But all three now at this point all positioned together, which is what you like to see. It's kind of got an overall downtrend feel to it, like you'd think. But you want to see this. If this is going to be a true reversal, we want to see all three of these. You want to see the 7 will pull in front today with another strong move. But we want to see this 14 and this 21 follow not too far behind it. Accumulation distributions held in there very well throughout the downtrend. You can see over the last week or so, it's actually got a nice turn and heading back north. Jacob Money Flow, of course, made a nice move right along with that, showing money's been actually pouring back into it, which is good. It correlates with when it dipped below that 200-day moving average, that people saw it as being at an oversold level and a good buying opportunity. So obviously buying started coming back into it. CCI and Full Stow both in great positions, still plenty of room to move. Tricks we talk about all the time. It's a very slow, smooth indicator. For a long-term reversal, which is what we're looking for here, we'll want to see this make a turn and get the bullish cross of the tricks and put itself heading back towards zero. What I think most people are looking for at this point is where now. Still plenty of room for the RSIs. You can see the 7 just now breaking through 50, 14 and 21. Haven't even got through 50 yet. Still not a great deal of separation. Plenty of room for that to move. I took a quick look at the short-term charts. They are getting pretty heavily overbought at this point. Just a lot of buying yesterday, closing near the high of the day. So be careful. A little bit leery of a gap this morning if that happens, and any kind of pullback where the short-term charts might want to reset. Most importantly, what I'd look for on the bottom side, support levels. 006 has got to be your bottom support from this point. It's got to hold that. But more importantly, I want to see it hold that 200-day. You want to see charts to be trading above the 50 and 200-day. Obviously, the 50 is higher at this point. If it wants to ping-pong back and forth in between, then that's okay. But let's see it hold that 200-day moving average and continue to make a higher move north off of that. Just a slight dip below it. Like I say, people saw it as a buying opportunity and jumped right back in. So hold 006 is the very bottom. In a perfect world, we want to see it hold that 200-day. It's a stronger chart if it does. On the top side, kind of against a little bit of resistance right now with where it closed, which might give that short-term chart some trouble. I would anticipate that a penny and a half is going to be a little bit tougher of a resistance, but I think it'll challenge that today pretty easily, which is still, some decent gains, over 10% if it does do that. The big dog is going to be 2 cents. If it wants to push that, obviously that's great gains today if it wants to, but at that point we're seeing classic PPS resistance at that point. We're also seeing the 50-day moving average there, and at that level it's also trying to get outside of the upper Bollinger Band. So look for 2 cents to be, if it does go up and push that. I'm not sure if this was news driven. I didn't look into it. This is purely a technical look at it. If it wants to go up and push 2 cents, that might be a selling point for a lot of people because of all the resistance right there. C charts typically do not want to trade outside of the Bollinger Band. They'll go out there, but the Bollinger Band, the PPS wants to pull back inside of it pretty quickly. So any move outside of it, it generally doesn't. A couple days is pretty unusual. You can see here when it moves outside, moves outside, moves outside, it peaked out and came back down. In this case, trading on the upper edge of it's great. That's bullish. But when it starts getting outside, you can see it wants to pull back in. It doesn't want to stay outside of that for very long. GOIG does a good job when it gets outside. It does get a lot of buying pressure. So I would look for this, though, 2 cents to be a strong resistance point for it. That would be my interpretation of it. So let's see if volume can continue to increase, which I suspect that it will. More people will be looking at this as a strong move. It's a classic, from a TA. It's a bullish engulfing. That's confirmed. So it should overall, it should try and continue north, but it's going to need to hold this 200-day moving average if it wants to dip back down and make a new higher high to be a true reversal. So this is my interpretation of GOIG. We'll see what it does today.